Hello everyone, in this video I would like to tell you about the smart money concept order block, how it's formed and how to use it to our advantage. What is an order block? Let's start from the very beginning and provide an example. When we have a consolidation, a kind of consolidation, where we have quite accurate borders, really visible and clear. We have accurate touches, as you see, with no infringing the borders of this level. When the price really respects this level, we always understand what is attractive here, the area where the price yet hasn't reached, because this area is full of liquidity. Why this area is full of liquidity? I think many of you already know. When traders are making their trades, especially those who are opening short position from these areas, they are placing their stop losses here. And this mass of stop losses create a really huge pool of liquidity. Then when we have the breakout of the level, the most popular strategy among the scalpers, all this liquidity is being executed. And this liquidity is partially a fuel for this impulse. In other words, stop losses activation provokes this impulse. Finally, when it comes down, the price rolls back, as most scalpers fixed their positions and all the stop losses were activated. No reason to go further. The price is getting back and behave according to the local demand and supply. It could be go lower as you wish. And we are coming to the plot of this video. What is more important? This area is an order block itself. Why? Because inside this breakout, the highest volumes were accumulated. Because they were the highest liquidity pool, plus many scalpers entered this trade, participated in this trade, and this area is the local maximum of extra high volumes. And the very important fact that market has the really good memory, and the price always reacts on such zones. The price reacts not only the historical levels, but on the areas with extra high volumes. Because huge players and retail, many participants see the previous zones of the interest. When the price gets back into this zone, it doesn't matter how long it takes. It could be several days or within an hour. It is relevant to all time frames. In 90% of cases, there is always the reaction. There is always the pullback. But we consider only the first approach. Only the first approach, because when there is a second approach, it's much more dangerous. It could be broken. That's why we consider only this pullback, and this is our profit. What should we do? What are the instructions? We divide our working volume into 3 parts, and we place 3 limit orders, in this case for sale, spreading them inside this zone. For example, our working volume is 100 lots. Here we have 20 lots, here we have 30 lots, and here we have 50 lots. Why in this order? Because activating 50 lots will enhance your average entry point. The better our entry point is, the more potential we could get from this movement. And we place the stop loss behind this zone. When the movement gives us 0.3-0.5%, we fix partially depending on the situation, 20 to 50% of movement, and replace our stop loss into the break-even point. Please always watch the BTC movement. It should be in flat, or its movement should coincide with the direction of your movement. In this case, the BTC should go down. This is the example of the order block. We see the quite accurate level, then we see the breakout, the price getting back in this diapason. And how should we stress out order block? We take the edge of this candle of the first color, of the red color. There will be the edge of the order block, and then we take the other edge of the next candle, reversal candle of the other color. They will be the borders of our order block, like this. And we are waiting for the price to come back to this level and waiting for the pullback. But be aware, another really important factor, they should be the break of the structure. Break of the structure is when the price getting back too deep into this diapason, but not just correcting back and continuing the downward movement. That's not the order block, it's just a downtrend. We should wait for such a movement, break of the structure. This is the structure, and it should break it. The price should go back into this diapason, and then and only then getting back to this zone, from where we are waiting for the pullback. I really hope this video was of great interest, and if you want to see more example, a real example with the order blocks, how it works out, please write it in the comments below. Thank you for your attention.